first started trading 5 years ago, I was looking for the best strategy to make me profitable. I was searching for the fastest way to make 10K a month with trading. But it took me 2 years of testing ICT, SMC, supply and demand, and every other single concept that exists to understand that profitable trading is boring and simple. The first part of this strategy is to ask yourself, what is the daily bias on the higher time frame? Do we think price is going to continue upward, or do we think price is going to continue downward? How we find that is by looking at the current candle. So today is Friday. As you can see, yesterday is Thursday, and we've been clearly on a strong uptrend that's very bullish. If we come here, we can see price came down, came up, came back down and made a lower low right here, because this low is lower than this one over here. And then we came up and ended up sweeping out this high to continue upward, meaning we had a change in structure and now we are bullish. Now, the next part to the strategy is what time do we trade at? We trade from 9:50 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. That's when the most amount of trading manipulation happens, with the high levels of volume and implied volatility that can easily get you stopped out, even if you use a big stop loss. So because of that, and we want to have the highest win rate possible, we're going to wait until 9:50 a.m. to 11 p.m. That's our time window to trade. However, there can be a news event at 10 a.m., which could absolutely destroy your account. So what you'll do is you'll always check forexfactory.com to see if there's a news event. So if there is a news event, you won't take a trade until 10:30 a.m. EST. Our third step is we want to look for a market structure shift on the 1 minute time frame. The reason why we're looking for a 1 minute market structure shift on the 1 minute time frame from 9:50 to 11 a.m. is because usually around this time, NQ and ES do a 10 a.m. reversal, meaning at this time, because it's the 4-hour candle close, whatever current market structure we're in the 1 minute time frame usually gets reversed around here for a good entry. So what we're going to go out and do is we want to see this high get broken. And once this high gets broken, we want to look for a pullback to then enter inside a position. So let's see what happens to price. We start to replay it. We sweep that high. So now we're looking for a pullback. So with this candle right here, we sweep that high right here, meaning that now because we swept this high, we are now bullish. So what we'd want to go out and do is, because this was the last bearish candle that went down these last two, we'll want to go out and see if we can get a pullback down to at least this area. And then our stop loss, we'd want to enter in right about the midpoint, or you can enter in right when it taps it. Stop loss just below here, looking to target a minimum of a 1-to-2 risk to reward ratio. So that's the number 4 step. We look for a pullback. So we wait, price comes in. To go out and get a higher risk to reward, you could draw a Fibonacci and do it at the 50% mark, or enter in right when it taps into it. And then stop loss just 5 to 10 points outside of the zone, or this last candle right here that finished bearish that closed near that open. So let's see what happens when we play price. It continues to go up, and look at that. Within only 5 minutes, we go out and get in for our 1-to-2 risk to reward. Oh wait, 1.5. So our 1-to-2 is right here. And then here you have your steps. So we had our pullback right here. We enter in. You can enter in either right when it taps, or for better risk to reward ratio at the 50% mark, because usually you get a deeper retracement. But for here, we'll just enter it right when it taps into the bearish order block, which is just the last 2 candles right here that closed bearish before we had the shift of structure. Essentially, this is sellers in control and then buyers stepped in. So this is an area the market would want to retest. We get the pullback. And then the 6th step would just be to go out and look for 1-to-2 risk to reward ratio. So we play out price. We end up getting a little bit of a deeper retracement, but right here, as you can see, we end up going out and getting it right here at this candle. And then we can see if price is up right there, 1-to-2. We can see if it keeps going. See what you could have gone if you kept holding the position. And then right here, max you could have possibly have gotten from this position would have been a 1-to, almost a 1-to-3. But even if you get the 1-to-2 risk to reward ratio, with a 1-to-2 risk to reward ratio, you only need to win 33% of your trades to be a profitable trader. That is going to wrap it up for today's video. Make sure to like, comment, and subscribe. And I also have my private Discord community completely for free that you can join. Link in the description, where you see my secret correlation strategy that I do not show anywhere else. And have a great one and see you in the next video.